Let's apply the flowchart on the disclosure of comprehensive income to an example. Have this flowchart in front of you and make your own notes as we work through the example. Before we begin, there should be note some potentially confusing terminology. The words comprehensive income and other comprehensive income, or OCI, are used throughout the module. Don't get confused into thinking these are the same. Comprehensive income refers to both profit and loss as well as other comprehensive income. Other comprehensive income is only a portion of or a subcomponent of comprehensive income. Consider the following extract of Entity A's trial balance. Prepare the statement of comprehensive income for Entity A. IAS 1 paragraph 10a gives us a choice of two approaches. The first is to have two separate statements, one for profit and loss and one for the combination of profit and loss and OCI. Note that the total of profit and loss from the first statement gets carried over to the beginning of the second statement. The second approach is a single statement comprising of both profit and loss and OCI. Now we have to decide whether to include them in profit and loss or OCI. The general rule in terms of IAS 1 paragraph 88 requires all incomes and expenses to be included in profit and loss unless there is a IFRS that requires it to be included in OCI. So what then are some of the standards that are exceptions to this general rule? Standards that require inclusion in OCI are IAS 8 for correction of errors and changes in accounting policies, IAS 16 and IAS 38 for revaluations, IAS 19 for the remeasurement of defined benefit plans, IAS 21 relating to gains and losses from translating financial statements of foreign operations, and IAS 9 has paragraphs that specifically require inclusion in OCI. So if we go through the extract trial balance for Entity A, the following items would follow the general rule and fall under profit and loss in terms of IAS 1 paragraph 88. Revaluation surplus will be included in OCI because it relates to specific requirements in IAS 16 that is one of the exceptions. So we know which items are to be included in profit and loss in OCI. Now we need to consider specific requirements for the disclosure within each section. The final profit or loss, as well as the consolidated comprehensive income, needs to be allocated between non-controlling interests and the parent entity's owners. This relates to business combinations, which is covered in a later module. If we do a single statement of profit and loss and other comprehensive income, we can present the profit and loss section as follows. Incomes less expenses gives us profit before tax. In this example, we assume that tax expense is $34,000. You should note that items can be aggregated and presented as a single line item, but there are specific items such as finance costs which are required to be separately disclosed. This is in terms of IAS 1 paragraph 82b. Items can be included in OCI section net of tax or before tax with an aggregate amount of tax for all OCI items. If we choose to present the OCI section net of tax, our statement would extend to include the grey shaded area. However, there is a further disclosure requirement for the OCI section. That is, items need to be split between those that may subsequently be reclassified to profit and loss and those that may not be subsequently reclassified to profit and loss. In our example, revaluation surplus will not be subsequently reclassified to profit and loss, and so it will appear under this heading in the OCI section. Finally, we need to reflect the total comprehensive income, which is the sum of profit and loss or profit for the year and other comprehensive income. To recap, when preparing the statements of profit and loss and other comprehensive income, there are choices that are available, as well as specific disclosure requirements that must be complied with.